देश भर के सभी दर्शकों को मेरा नमस्कार। मैं प्रतिभा चौधरी, IRS, एडिशनल डायरेक्टर PR and PP, CBDT, New Delhi, extend a warm welcome to all of you to another special edition of Samvaad. Friends, the government has introduced the income tax bill in Parliament, a significant steps towards simplifying and consolidating the provisions of the Income Tax Act 1961. This proposed legislation aims to enhance clarity, ease compliance, and modernize tax administration. To discuss some key aspects of the salary, house property, and exemption proposed in the new bill, we have with us today a very distinguished guest from the Income Tax Department. We heartily welcome Mrs. Prajna Paramita. She is an IRS officer of 2004 batch, presently posted as Commissioner of Income Tax, International Tax 3, Nai Delhi. In a career spanning over 2 decades, ma'am has worked in diverse charges at Ludhiana, Amritsar, Vadodara, and also at CBDT with the ITA division and TPL division. Ma'am has been a member of the core committee, which has been instrumental in redrafting the entire Income Tax Act. We are honored to have you with us, ma'am. Thank you, ma'am, for joining us today in this Samvaad episode. We welcome you, ma'am.
Thank you so much.
Ma'am, firstly, our viewers would like to know what is the proposal of the government for salaried taxpayer. So far, the provisions are complex and difficult for common middle class taxpayers to understand. What specific steps have been taken to simplify its language and structure to make it more accessible to the common taxpayer?
Pratibha, the process of simplification of the Act focuses on enhancing clarity and ensuring ease of reading. The parts on salary and house property, which mostly concerns our middle class taxpayers, have specifically been designed for this purpose so that common taxpayer can read them and file his own return of income. So, the first step towards forming these chapters was taking into account the grievances that are with our central processing center. We have taken note of the grievances with CPC for last 5 years. We had a subcommittee of 5 officers of the department for this purpose. The subcommittee took help of CPC at Bengaluru and collected last 5 years grievances for ITR 1 and 2, that is filed by the salaried taxpayers. Also the feedback of stakeholder consultation process, and with that we designed these 2 chapters.
Okay, ma'am. Ma'am, is there anything new in the chapter related to salary income?
First of all, the restructuring has significantly reduced the length of the salary part, more than by 22%. All existing provisos and explanations across various sections like rest of the Act have been now integrated in the main provision. There are certain redundant provisos, like one proviso is there specifically only for the year 2001. So, such redundant provisos have also been removed. All provisions related to salary are now brought under the part, so that the taxpayer does not have to refer to different chapters for calculating his salary income. Like we have allowances in section 10. This is part of salary income, but the heading is under section chapter 3. So, now that has been brought under the salary part. Now the part is simple to read, clarifying all crucial terminology like perquisite, profits in lieu of salary. Separate sections have been made for perquisites and profits in lieu of salary. Deductions are put under one single section. The legal and technical jargons have now been minimized, and provisions like perquisites have been rewritten in a very simple and lucid manner. Wherever required, the proposed bill has moved parts of earlier chapter to rules for ease of reading and better comprehension.
Ma'am, how will the change reduce the compliance burden on individual salaried taxpayers?
The review of the existing Act started as a comprehensive process in the month of September 2024, and the subcommittee proposed some changes also in the existing provisions like taxability of perquisites, certain perquisites for specified employees. The proposed bill sought to increase the limits for that. So, they have been accepted by the government, and the finance bill has brought in those amendments. The finance bill 2025 has also increased the threshold for filing of return of income. The limits for rebates and reliefs have also been changed. So, we can safely hope that these changes would go a long way in reducing the compliance burden on the taxpayer.
Ma'am, what steps have been taken to reduce grievances and involve stakeholders in the simplification process, and how has their feedback been incorporated into the new bill?
The government is most conscious to provide maximum ease to its largest number of taxpayers, that are the salaried taxpayers. As the process started with examination of existing grievances at the level of Central Processing Center at Bangalore, the subcommittee took note of the smallest of grievances there. I would give an example. A common grievance that was found across the years was that allowances also form part of salary income. Our common taxpayer does not know that because it features in a different chapter under exemption section 10. So he is not showing them as part of salary income. When he is claiming a deduction on that, it gets automatically rejected. The subcommittee took note of the grievance, and what the proposed bill seeks to do is to bring allowances under the chapter of salary. Most of the important allowances which form part of salary income, like your VRS compensation, like leave encashment, pension, gratuity, they are now brought into the salary chapter, so that the taxpayer knows that they form components of salary income, shows them accordingly, gets a deduction on it, and just by drafting and structuring of the act, the proposed bill seeks to reduce a large chunk of grievances that are existing as on today.
Ma'am, has some content on salary and house property income been shifted from the Act to the rules? If yes, how much and what is the rationale behind it?
One significant change I would say is moving the threshold for taxable perquisites to rules. This is for providing more flexibility to administration, so that you can change the limits as per the changing needs wherever required.
Ma'am, have deductions and exemptions been removed from the new bill?
One of the key moments on exemption and deductions was articulated by the government during union budget in 2015-16, when the government decided to phase out the exemption and deductions. New tax regime was brought in 2019, but I would say the momentous turn for salaried taxpayers came in 2023, when new tax regime was made the default tax regime. Government introduced standard deduction and certain other benefits also for the benefit of taxpayers in new tax regime. In Finance Bill 2025 also, we have increased the threshold for filing of return of income, and the limit for rebates and reliefs have also been increased. So I would say, though exemption and deductions continue to remain in force, the new tax regime has continually been made more and more taxpayer friendly and lucrative.
Ma'am, can you briefly explain the provisions related to exemption provided in the present section 10? Also, what were the difficulties in comprehending the existing provisions?
The provisions related to exemptions are contained in section 10 of the present Income Tax Act. There are around 140 clauses in section 10 providing exemptions to certain incomes and certain persons also. Section 10 evolved into its present shape with changes being made almost every year, either to provide exemption to certain person or to certain income, or to do away with certain exemptions depending upon the changing economic need. Since so far as difficulty in dealing with the section, I would say section 10 starts with an opening line, and that is why it contains clauses. Around 140 clauses are there. That therein lies the inherent challenges to drafting. Since there is an opening line, we have to introduce subclauses and exceptions, explanations and provisos every time we make a change. So much so that clause 23 of section 10 contains 15 subclauses, and it also has 24 provisos. So it is difficult to read even for departmental officers and tax experts.
Ma'am, what approach has been followed while incorporating this section 10 in the new bill? How has this reduced complexities in the new bill?
As I already stated, section 10 is a drafting challenge. So now it has been decided, and all the provisions related to exemptions have now been redrafted into 6 different schedules. I would give the example. Now section 10 is incorporated in schedule 2 to schedule 7. So schedule 2 contains income which is exempt for everybody, like Sukanya Samriddhi, income under Sukanya Samriddhi account. It is exempt for all of us, like you and me. So they are contained in schedule 2. Schedule 3 contains income exempt for certain eligible persons, like members of a HUF or partners of a firm. Schedule 4 contains exempt income of non-residents. Schedule 5 contains exempt income of business trust, REIT, InvIT, sovereign wealth fund, etc. Schedule 6 contains exempt income of IFSC and its units, and Schedule 7 finally contains income exempt for certain persons like PM Care Fund or other such persons. So now they are spread across 6 schedules. All the redundant provisions has been removed, and the tables now contain 3 columns. First column contains exempt income, second column contains exempt person, and third column contains the conditions under which such exemptions are provided.
Ma'am, if the provisions related to exemptions are proposed to be taken to schedule, then are there any provision in the main body of the new bill?
Yes, the substantive part has been provided through section 11 of the proposed bill, where it says that certain incomes or certain persons which are exempt from income tax shall be through schedules. So, the substantive part lies in the proposed bill.
Ma'am, what about the clauses of section 10 which do not find place in the schedule?
There were certain redundant provisions in the section 10 that has not been carried over. There are certain sunset investments also, but we needed to protect those investments because they might have some income element in them, like interest under section 1015. So, they have been put under a saving clause in the new schedules.
We are truly grateful, ma'am, for your time and for enlightening us on such an important subject. Your insights into salary, house property, and exemption of the new will be immensely valuable to our viewers. I am truly grateful to our esteemed viewers for their time and patience. आपका दिन शुभ हो. नमस्कार. जय हिंद.